What's going on, everybody? Hopefully everybody's having a great trading week and we are learning something and paying attention to details. Today's going to be a pretty similar video of what I discussing before, but it's going to be about price action on GBPUSD. It's pretty much all the same, but you just tweak a little bit things here and there based on the pair that you're trading. And let's get right into the video. Oh, on this pair right here, we had a pretty range, but it's still an uptrend no matter what. So what I was looking for was mostly buy opportunities rather than sell opportunities, even though there was sell opportunities, but it's better to stay with the trend. But you can take a riskier trade on a short position. So this is what I first called out, and I was talking to other people on social media about this right here, this reaction right here. I'm going to show you what it is that I was looking at exactly and how I trade it. So first things first is we want to look for an area after I seen this drop right here. This is a heavy sell-off, but we are still very bullish on GBP. So what it is that I seen was as soon as we started to come down to here, I was looking for a buy opportunity. The buy opportunity for me would be in this supply, this right here, this demand zone that came in right here before previously. So you have to be patient. The key is patience. So when you're patient, you'll get a good entry. If you're not patient and you just start to buy in random areas or when it touches certain areas, price might also continue to the downside and you won't get a proper entry. If you do it too many times often, you will blow up your account and you'll be left trying to figure out what's going on. So when you draw this out, you want to extend out, of course, to the price that is coming to. So when I first drew this out, I was looking at the 1 hour chart. I was looking at the closes. You can see the closes was 1, 2, 3, 4. 4 times it closed above this. So to me, this is going to be a strong area right here. And then what I did was I extended it far enough out to give it as much reach as possible below this as far as stop losses that might get hit. Didn't worry too much about this just because of the fact that it had such a strong reaction to the upside before push up. So I was worrying about these wicks right here. This wick, this, and this. So we extended down, and the key is not to be exact. The key is to find confirmation, and you're trading the close. Now the next thing is you look at the volume bar. Again, everybody's going to sit there and say the same thing over and over, that this is not true volume. That is correct. It is not true volume. It is price action as far as ticks goes. How many times has been ticked back and forth for the ask and the bid to be hit? This gives me indication as far as how more likely of a fact is it to reverse or to continue based off of the next candle after, not the exact candle, the next candle after. So this is what you would do. You would look at the volume bar on that time frame, which is 6. And this time of hour it was just 6. The only reason that we look at the time for this bar and not just look at volume right here is because of the fact that you want to see different time of the day, you can say, as different amounts of liquidity in the market. So for example, if I were to see something like this at 11 o'clock happen right here, I know for sure with a bullish reaction, I know for sure for a fact that this thing is going back up because of the fact that that is just way too much volume. But it's still, if you look at it, still a good amount of volume because I look at the previous 2 days to see if it is higher volume. So I look let's see, this is 2702. 2702 is the volume. Right at the green, you can see it. And if you come back to 6 a.m., you can see, what does that candle tell you it is on that volume bar? It's 2392. I'm going to go back one more day and we look, and you can see this is what? This is only 1686. So what does this tell me? That there is more liquidity that came into the market right here. So for me, that's indication that there might be a buying opportunity. Now, we come back over here and we see a bullish reaction. You have to wait on the next hourly candle to close to be able to react if you want to enter the trade. Sometimes if there's 10 minutes left and it's looking like there's going to be a bullish reaction, I will enter the trade before it closes. But I would recommend for beginner traders to wait for the close. So what you can do is you come here, and this is how you enter. Enter on the 5-minute chart. You put the 5-minute chart and you wait for a no supply to happen down here. Up here you would wait for a no demand, for example. So you wait for a no supply. So a no supply happened right about here. You gotta remember, if the no supply that you are looking at, the next candles get closed below it, this is no longer a no supply. It is an invalid trade. You have to make sure that it does not close below the wicks. It did not close below the wicks. It was close, but it didn't close below it. And then we had confirmation right here. This happened at 7:55, the confirmation. So this is clear indication for me that this is looking like it's going to close very bullish. It closed bullish, and we had entry right here. Now, how would I conduct my trading when I'm entered into the trade? You would have a stop loss below this, however comfortable you feel. Me personally, on GBP, I look for, depending, stop losses below the low. It depends. It could be from 3 to 5 pips. It could be from 5 to 10 pips. It could be from 10 to 15 pips. In that range, it depends how strong the push down was. So I will enter the trade here, stop loss there, and then as you're in the trade, you can see how the reactions are happening. As we push up, we got an increase in volume right here. So once I see something like that happen, I would move my stop to break even, maybe even take profit, half of the position off. To reaction, as soon as we came down, look at this volume, higher volume than any of the times right here, with a bullish reaction. So this indicates to me that bulls are very much in control. So you can also re-enter the trade right here, just because of how strong they are. And you can see this is where I exit the trade right about here, because of the fact that this is such high volume right here, is push up, and then the reactions are starting to come in with sellers. Sellers are starting to come in because they cannot make higher highs, where they can't close above the wicks. So to me, if it breaks back below these right here, I will exit trade. So you exit trade, a nice, 340, 342, that was about, I think it was around like 90 some pips. It's nice entry, and that was basically that trade. Now real quickly, I want to show you again how repetition is key to this, and understanding repetition will help you trade better. So look what happened right here. If you were to extend this out right here, and then you see this reaction at 7 a.m. you had high volume, right? Now let's go look back. 7 a.m. higher than this volume. 7 a.m. higher than this. It's clearly higher. 36.65, 30.49, and 5,146. But the problem is you gotta know the reaction was bearish. That's why you just can't enter randomly. You need reactions. So the next candle is the key. So if you were to enter this trade right here, thinking the fact that, oh, this is such a long wick push up and from this area, no, they could come, market makers, smart money, whatever you want to call them, institutions, could come and push it back down as far as they know that they could reach. Sometimes they get faked out for themselves because other institutions will come in and start buying up as they are selling. So for example, you got a bad reaction. I wouldn't enter this trade. The trade that you can enter would be on this candle, which is, if we look back, it is the low from here. So what you can do is, again, you come, grab your rectangle, the close is right here. These, you can see them, extend out. Simple as that. Extend out. Look what kind of reaction we had. Look at this reaction right here. You can see high volume at 8 o'clock, 8 a.m. That is 46.10. And you can see it right here, 25.45. And you can see it right here, 32.36. So we had high volume right here, bullish reaction. Entry on the trade would be right about here, right on this candle right here, you would enter right here. As soon as we broke the previous push up, turned support, resistance before you break above here, previous resistance, break above, close, enter right here, or you can also enter right here as soon as you close above that. So you enter this trade, again, stop loss below, and you've seen the up move, which happened all the way up to around here, that time of the day. That was about roughly, I think it was about like 40 pips, something like that, 45 pips. I would say that's not bad of a trade also. And that is pretty much for GBPUSD. That is the way I trade. Hit me up if you want to learn more. I have no problem. I provide, as much help as I can personally. If somebody wants to, shoot me an email, message, DM, whatever you want to. And if I can get back to it ASAP, I will hit you back up. Or just leave the simplest of things is leave a comment below, like and share. And please don't forget to subscribe. Peace out.